Good morning. Paul Georgie from Allendale. It's January 13th, Friday the 13th, and markets are adjusting from yesterday's extremely volatile day. The grain markets, of course, yesterday were down sharply off the USDA report. We're hearing a lot of comments here this morning and right after the report that the USDA is wrong. These numbers are not anywhere near correct. The bottom line is, however, those are the numbers that we're going to have to deal with from now through the end of the year. The data that came out yesterday is going to be used as the economists, traders try to calculate and project supply, demand down the road. So we can not believe them, but that's the way it'll be. And so once we get through with that and we look at the total supply of corn, it looks like we could have some follow-through selling here today. The market was down limit yesterday, or 40 cents in the nearby contracts. That could give us a little more selling pressure here today as trade tries to even up positions, get out of those positions that aren't working ahead of a long weekend. So one problem follows another here, the way it looks at this point in time. Another note that we need to watch for is that the index funds, who are rebalancing here at the early part of this year, could not get out of positions yesterday because they were wanting to sell corn. They could not get out on the close yesterday, so they will be in likely sometime today to get those positions rebalanced ahead of the 15th, which is kind of their deadline to have the rebalancing done. Another reminder, today is last trading day for the January contracts in grains, so we could see a bit of fireworks there as they go off the board at noon today. Other news, Japan announced that some import data there, and it looks like they're doubling their corn purchases out of the EU instead of coming to the U.S. and paying higher prices. So demand is still very, very critical in trying to find a bottom or support in this market. So those are the things we're going to be watching here today. The 8 o'clock time frame, the USDA usually gives us some export data on a daily basis, any export sales. We'll be watching that here as we go over the next several weeks. In other markets, dollar is a little stronger today. Yesterday it was under a lot of pressure because the Spain bond auction went very well, and it looked like the EU had hope infused into it again, and the dollar was under pressure. Well, today the dollar is up about 20 points as we speak, off of concern that the Italian bond auction yesterday, or overnight actually, did not go as well as expected. Even though it was less than it was a few months ago, because of the infusion of money that the European Central Bank has put into these countries, helped reduce the rate. It still wasn't as good as the Spanish auction was the day before. Rainfall in South America is always a key concern here for the next several weeks. We had this system move across this week. Most areas, 85% to 90% of the area got rain. Some very small amounts. Some areas it's not going to be beneficial at all. But areas that got a significant amount of rain will be helpful. So what it did is shrink that dry area some. In the next 5 days, the outlook is Argentina should get 75% coverage in their soybean area, about 75% coverage in the corn growing area. Brazil will receive 75% coverage. Argentina, much drier, only 25% coverage there in the corn and soybean areas expected. The longer-term forecast is now putting a little more moisture in, cooler temperatures, and I think that could slow down the evaporation and also help some of the crops that weren't totally killed because of the dry conditions. So still a lot of volatility concerns here as we go into next week. Markets will open on Monday night, and we will be watching those for you. If you got any questions, give us a call at 800-262-7538. Over in the livestock markets, cutout values there, as we mentioned last week, we were going to see some pressure there. We certainly have. Cutout of choice was down 222 yesterday. Select down 103. We're still waiting for the Packers to buy cattle this week. They were standoff yesterday. It looks like they will be certainly wanting to buy cattle at lower money, while feedlots would be happy if we could get that 122, 123 area that we had last week. Pork cutout values were a little higher. Futures seen good strength yesterday. The weakness in the corn market has supported the nearby pork complex, mainly because the feeling is that, well, if we've got cheaper corn prices, and the profitability right now is in the pork industry, so we'll hold hogs off of the market, and slaughters will become tighter, supplies come tighter, and therefore put pressure on the deferreds. A lot of spreading liquidation there, where people are buying the nearby, selling the deferred. So stay tuned to Allendale Research. We'll keep you informed the best we can. If you got any questions, give us a call, 800-262-7538. And don't forget to sign up for the Allendale Conference coming up here next weekend, and we'd love to see you there. Have a safe weekend. We'll talk to you on Tuesday morning. Thank you.